Welcome to the Red Wagon Estate Planning and Elder Law Show, hosted by me, yours truly, Jeffrey Belomo, where we discuss all things estate planning and elder law, and well, hey, anything else you want to talk about. Now, on today's episode of the Red Wagon Estate Planning and Elder Law Show, we have our first repeat guest. So I'm really excited that we finally have someone who wanted to come back other than me alone. I'm joking. I'm sure others would love to. But Ken Pitts is with me today. Ken, how you doing?
I'm doing great, Jeff. Thanks for having me back. Really
Yeah,
appreciate
you're
it.
welcome,
Good to be
man.
here.
You're welcome. So for those of you who have been loyal to our podcast, you know that Ken was appeared on the podcast in early 2023. So it's been a little while. Ken is with Advisors Mortgage Services, and we are going to talk a little bit about all things today with Ken. But specifically, we want to talk a little bit about his book, Kinetic Wealth, that has come out. And I actually have read it. So Ken, I love the book. I think it is a wonderful representation of what you guys do. And I'm certainly excited to talk about that book today. And also, I'm sure we'll talk about reverse mortgages and some of the real life stories that we have and things that we can tell people about. So before we get into the podcast, the lawyer in me has to do just a quick disclaimer. Just remember, please do not take what you hear from this podcast, well, or any other podcast for that matter, to constitute legal advice. If you are looking for legal advice specific to a situation regarding your specifics, please contact an attorney licensed in the state that you reside in who practices law in the areas of law that you are looking for advice in. And after you meet with them and talk about your specific facts and scenarios, should you take what they say to constitute legal advice. This show and any other show for that matter should be looked at for educational, informational, and entertainment purposes only. And while we may talk about specific cases on this podcast, they are not to be taken as general rules that always work. Obviously, every scenario is dependent on the facts and circumstances of that specific case, which is why you have Ken, because Ken will be able to make sure that your facts fall squarely under the cases and that the rules are the way they're supposed to be and the facts are the way they're supposed to be. And then he will give you some advice on whether or not the reverse mortgage will work for you in that specific situation. But I'm positive that you're going to learn a lot today about the book as well as about reverse mortgages and scenarios, ways to use them, ways that they can be beneficial to you and your family, potentially in scenarios that we probably don't even really think of. So I know there's going to be a lot of value today, and I'm looking forward to it. I also just want to remind people, as it relates to the estate planning and elder law context, if you are looking for education in the regards of estate planning and elder law, please contact Belomo and Associates at 717-845-5390. 717-845-5390, or check us out on the web at www.belomoassociates.com. That is B as in boy, ELLOMO, associates spelled out with an S.com. And we certainly would love to assist you. We offer free educational workshops in the areas of pre-planning or estate planning, crisis Medicaid planning, special needs planning, life care planning, and post-death administration. So if you need any information or education pertaining to those areas, we would love to be able to educate you at no cost. We educate at Belomo and Associates so that what happened to my family does not happen to yours. All right. Well, we look forward to assisting you and educating you in any way that we can. Now, Ken, how's it going, man? It's been a little while, huh?
Yes, it's been a bit, but it's going really well. I'm excited about the book and how well the book's doing, and
Yeah.
I've just met a lot of really wonderful people uh, getting into working through reverse mortgages with folks, and I probably find it rewarding the same way you do when you're able to solve people's problems. It's exciting to see kind of that weight lifted off their shoulder, and see that they get some light at the end of the tunnel and feel the success of having met with you and gotten a good plan in order. That's how I feel when I'm working with clients.
Heck yeah. Peace of mind. I think peace of mind is so valuable. And That's what people need at times when things are tough and when they don't know which way to turn. So we both certainly provide education and advice in areas that well, A, are not all that well known, and certainly there's not a lot of people out there providing education in those spaces, but also, uh, ways to provide benefits that people never even thought of. I know when we did our last podcast and reading the book and just talking to you, some of the things that you're able to do are just incredible. To be frank, I didn't realize it, and I'm sure if I didn't realize it, there's probably people out there who also didn't realize it. So that is why I'm excited to have you back. And I was going to be half joking when I said, hey, since we met last time, is there anything in your world that's going on? But as a also published author, I know what an honor it is to have a book get published and get out into the community. So I won't even beat around the bush. I won't joke around about it. Talk a little bit about the book, man. Congratulations.
Thank you. Thank you. It was, it, I got to tell you, on the last time we did a podcast, you said something that I constantly use all the time.
Oh,
You said,
man.
you said confusion says no.
Oh, yeah.
And that stuck in my head. And it
Yeah.
was, it was one of the reasons why, along with another person's urging, that I wrote the book, because
Oh, really? I
I
didn't realize that.
realized I just realized there was so much confusion about reverse mortgages, what they were, how to apply them, when it was the right time, all of that. There was so much confusion out there. I said, I was explaining that. I was on a podcast explaining it to a financial planner, and at the end of the podcast, he was like, "Man, you got to write a book." But I
Yeah.
told him, I said that, I repeated, "Your confusion says no." And I think that's how people are. I mean, it's a different type of product. They're not used to it.
Oh,
It
yeah.
it works in reverse of what everybody has taken out as a mortgage to buy a home. So confusion says no. People shut it down. They don't listen. They don't really try and go
Yeah.
about educating themselves on it. And I think that's a shame, because it's a great financial planning tool. Some of the best retirement economists recommend it, and it's just odd that it has kind of this negative reputation out there. And I
Purely
think it's
because of
been passed
confusion.
around because of either being misapplied, misused, or people just not being educated on the product that they got.
Yeah.
And that's what prompted me to write the book. I thought I would just be handing it out to clients, potential clients, which I do. If somebody
Yeah.
calls me about a reverse, first thing I do is I send them a copy of the book, say, get a chance, read through this. It'll give you a good understanding of the product. But I have financial planners have been buying the book, and sending me notes about it, and just basically saying, "Hey, it's not the product I thought it was. I'm glad you explained it now, and how it could fit into people's plans." So it's been a real rush, having gotten it done, and it was a project. I'll tell you, it took some time.
As a lawyer, this is probably coming more from my lawyer background. One of the downsides of reading so many books and attending so many seminars on, sales and marketing and those kind of things is that you learn something and then you kind of modify the concept or the principle so that it resonates to you. And I wish that I could give credit to the proper person because that's who I am. The actual sales phrase is a confused mind says no. And I modified it for myself because I just kind of like it. And you remember the way that I say it, but I do want to put out there just so that people don't think that I'm taking credit for a fairly straightforward sales kind of idea. But I think it's so powerful that a confused mind always says no. And that's why I changed it to confusion, because I know that that's really what it is. It's confusion. And all right. So if I was to ask you, give me the Reader's Digest summary version of the book, what would you say this Reader's Digest summary version of the book is?
The front half of the book is designed to give you just a feel for how that loan gets applied, why it was brought about in the first place by the federal government, and how you can apply it to your own financial plan. The back half of the book, it's really numbers,
Yeah.
situations, and a playbook for what you do going into the loan and how you get out of the loan at the end. So there's almost three audiences that I went after in the book at the same time. One is the user, the person that gets out the mortgage. The second are the financial planners who may be advising people to take it.
Yeah.
And the third is for the heirs, so they know what to do at the end. And
Yeah.
everybody needs to know all three parts. But even within those individual parts, there's depth of understanding to just try and make the product really hum.
I would imagine the advisors are probably the ones who are the most surprised and the ones who are probably getting the most out of it, because I think that advisors a lot of times um, think that they kind of know all of that stuff. And then when all of a sudden you're learning about a new product that's a little different than what you know and that what you thought it did, I got to believe that they're the ones who are probably the most surprised.
I would say that that's true. That
Okay.
I actually found some. I had interviewed as part of the book. I got to interview 72 financial advisors. I was trying for
Woo.
100, but I couldn't get to 100. But I got 72 advisors, and I just did a quick survey interview with them, and only 5 really knew the product. And out of that 5, 3 of them recommended it as part of a financial plan.
Really?
The vast majority had heard of it, didn't understand it. Many of them thought the bank took over the house. Some of them thought the bank gets all the equity at the end. I mean, there was a lot of misunderstanding about the product, and it was eye opening. That's for sure, because you would think that this is a very important part of financial planning, especially for people that have $1.5-2 million less in investable assets.
Right.
The house is probably the next major asset. In some cases, it's the major asset that somebody has. And you would think somebody would want to have, a good understanding of that product. And even though it's in a lot of continuing education programs, it was a little bit shocking of the lack of knowledge.
Sounds like a lot of confused minds.
Yeah. Which is why there's a lot of no when you bring it up.
Right. I mean, and now you've taken the step of putting the book out. I'm sure that as part of it, you've talked to a lot of professionals who have read it, or at least read enough of it to know that, yeah, there's something here. I need to learn a little more, and maybe they pick up the phone and call you rather than read the whole thing. But regardless, they're getting educated.
Yeah. And it's I've had such a breadth of, and I apologize. I think I have a light going crazy behind here.
Oh, do you? I didn't even notice.
If give me 2 seconds, let me see what's
All right. Sounds good.
all right. Sorry about that. I don't know
No
what's going
sweat.
on there, but it was starting to get a little Freaky Friday in the back.
Yeah.
So I think what's been interesting is just the amount of different applications that I've applied the loan to. It's a wide breadth, and I think that's where a lot of people originally pigeonholed this product as the mortgage of last resort. I'm out of money. I got to get some money. This is the only asset I have left. That's the worst time to employ it, because it really, if you master the art of applying this loan early enough in your retirement, boy, it could change the complexion of your entire retirement. And I
All right.
think
So treat me as a complete idiot. I know absolutely nothing, and we're walking into each other on the streets, and I say to you, Ken, what's a reverse mortgage? I don't even know what that means. I am a person, and let's be frank, I'm not going to read the entire book because I'm overwhelmed. But could you just tell me in simple terms what it means? What would you say to me?
I would tell you that a reverse mortgage is an opportunity to get access to the equity that's been built in your residence to help you out with monthly cash flow, to help you out with emergency expenses, and to help plan out your retirement so that the money that you have saved in your IRA lasts long.
Awesome. And is it overwhelming and cumbersome? Is the process ridiculous? I'm just trying to think of questions that I would ask if I met you on the street.
Process is exactly like getting any other loan.
Okay.
and the qualifications for the loan are actually easier. Um,
Really?
in
I didn't
a
know that.
regular loan, we look at debt ratio and payback capability. Can you cash flow payments? In the reverse, you have no payments. So what we really look at is what's called residual income. Do you have enough money left over after, when you receive your social security, and maybe if you have an annuity or some type of, your investment draws, do you have enough money left over to be able to pay your taxes and your insurance? And we even do a maintenance of the house calculation based on the square footage. So it's a very low bar to be able to qualify based on that
Okay.
residual income. Uh, but we do it as a necessary part because I think too many people did it as a last resort and they couldn't afford to keep the house up. Not the way you want to
Oh,
employ a mortgage,
yeah.
right? You want to
No,
employ a mortgage
no.
that you can sustain your assets, sustain the house, be able to age in place. A lot of people don't want to go into a nursing home facility. They'd rather age
Right.
at home. And if you can use a reverse mortgage to help you afford that, but that's probably one of the number one reasons I see people take them out is they utilize that
Yeah.
equity in their home to help pay for in-home care.
I don't know in 23 if we talked about this or not. I mean, it seems like a lifetime ago, to be completely honest, just because of life, we both have kind of gotten a lot going on in our lives. But that's what I have found has been the biggest surprise to me is how favorable the Medicaid rules are, particularly in Pennsylvania. Now, I think they are in other states, but I can really only speak to Pennsylvania in looking at a reverse mortgage as it relates to qualification for Medicaid waiver, staying in your home, getting the care in the home. They couldn't have gone to more lengths to provide favorable status for reverse mortgages in Pennsylvania as it relates to Medicaid waiver services. I mean, they couldn't have done anything more. So that's where I see it. Now, I have very limited, as you know, I have a very limited scope of where my clients use it, but 100% of the cases that I see all the time are people who want to stay home, who do not want to go to a nursing home, and they're trying to take advantage of the equity and in some cases qualify for waiver and get more assistance and get help in the home. And it's a win-win.
It really is, you, and part of that goes back to when the program was originally instituted back in the early '80s. It was actually first instituted as a retirement product backed by the government in the first run, actually the second run of Ronald Reagan, his second term, and it got ratified in 1989 as an official HUD product. And the whole thing that they were seeing, the gerontologists were all coming up with the same conclusions. People are going to live longer. They're going to outlive their savings, and they're not going to make it on Social Security. And that's why this product was originally instituted by the federal government, was
No way.
really to they could see the gap coming because of longevity. And what have we seen over the last 30 plus years since his term is that people are living longer. They're outliving
Yeah.
their savings and they have this huge asset. And this is a place to go to get cash flow. So the IRS doesn't consider the cash flow you pull from a reverse mortgage as income.
Right.
It's a loan to that. And Medicaid's lockstep with that. Yes, it's
Yes.
a loan. They've taken it out as a loan. And, it may be helping to pay for expenses around the house and long term care and things like that, but it is looked at as a loan. So it's not really looked at as cash flow. And so it helps when you're doing those kind of evaluations for Medicaid, and it helps keep your tax situation in line.
Yeah, I remember when I don't know what year it was, but I remember the first case year. I mean, we're going back several years now, but where I was learning about reverse mortgages and somebody had said to me, you know, my advisor, the person I'm working with, said that for Medicaid purposes, it's treated as very favorable and they don't count it as an asset. They don't count it as an income stream that puts them over the income cap limit. And I remember thinking to myself, oh, come on, that is too good to be true. There's no way that the government would be that favorable to an asset. And of course, I did research and I learned that that was in fact true. And it was in fact one of the benefits of it in the context that that I see it in more. But you're right. I mean, they couldn't have been more favorable.
Yeah, and it was really there was really a lot of concern uh, in the '80s that people were going to, and look, we're seeing it.
We're
People
seeing
are
it.
struggling to get through retirement, and you have a couple of years like we had. It happens, cycle through. You get a heavy inflation years. All of a sudden, the money you were living on now is short, and
Yep.
I think a lot of people don't grasp the concept that inflation it's like yeast in bread. You can't take it out
Oh no.
once it's inflated, and that's it. That's the new price level, and that's where you're going
Yeah.
to be. And so, for a lot of folks, what was kind of making ends meet and getting over the hump, and they were good. Now they're behind, and
Yeah.
they're making hard choices about medications and doctor
Right.
visits and things. They're looking at their expenses, saying, "What do I got to do?" And they're just completely looking past probably the largest asset in their portfolio or the second largest asset.
Right. So you mentioned earlier that one of the things you found as you did your interviews of the advisors in particular was that they had this misconception. There was a lot of confusion, but specifically, it was around they take your house at the end. So could you just talk a little bit about that so we can clear that up? Because I hear that all the time too. That's one of the things that I hear when I bring it up. They're like, they're going to take my house. So could you talk a little bit about what that looks like at the end?
Yeah. So Jeff, just think about, if you have a mortgage on your house or you had a mortgage on your house, if you were to pass away, right? And you were the only person on that mortgage, on that loan's got to get paid off.
Right.
It just does. If when that's
Right.
part of any loan. So the same thing happens with a reverse mortgage. If whoever's on that mortgage passes away, yeah, the loan's got to get paid off. We'll talk about some special provisions they made for non-borrowing spouses, but it works the same way as any primary mortgage. When you die, it has to get paid off. There's another trigger point with the reverse mortgage, and that is if you go into a long-term care nursing facility for more than 12 months. So you get paid beyond 12 months, it also has to get paid. That's a secondary trigger point that you might meet. But whatever equity's left in the house, it's no different than any other estate. That equity
Right.
goes to the estate, and the estate divvies up the equity that's left over. So whether you
Yep.
die with a forward mortgage or a reverse mortgage, same end. You own the home. House gets sold to pay off the loan. Proceeds of the loan, whatever's left over after the mortgages are paid off, goes to the estate.
Right. Yeah.
And I think
It's no different. I don't know where that confusion started.
well, you know what I found in writing the book, and I actually discuss it in the book. I found out part of where this comes from. Okay.
Oh,
So prior to 2014, when people were writing reverse mortgages, you might have a spouse who is 61, so she's too young to take out a reverse mortgage. Husband might be 67, 68 years old. They would write the loan in the husband's name only. Okay. Wife wouldn't be anywhere on any of the paperwork except releasing the house, signing a mortgage to release the house in the event of foreclosure. So now you go along and the husband dies. Well, now the wife has to sell the house to pay off the loan or write a check, right? Somehow the loan's got to get paid off because the person behind the
oh,
note has passed,
of course.
like any
Right.
other mortgage.
Just
Well,
like
this
any other. Yep.
created a problem. And in 2014, they made revisions to the program to protect against this. And this goes
Wow.
back to something I said just a few minutes ago. There is a category of borrower called a non borrowing spouse. So maybe they're too young to be on the loan, but they come on as a non borrowing spouse. As a non borrowing spouse, they get the ability to continue to live in that house until they pass or go into long term care, till they hit one of the two trigger points. So that protects them to be able to stay in the house and not lose it. And there was a very famous, in our world, in the reverse mortgage world, there was a famous case, and with the estate of Caldwell Jones. I don't know if you remember Caldwell Jones, he played for the Sixers way back when,
Oh yeah.
right?
Yep.
He took one out in his early 60s. his wife was under 62 at the time. And they wrote the mortgage in his name only. And unfortunately, he had a heart attack and died. And the wife was stuck in this position. And she sued to try and maintain the house. And she actually lost the case. But in the case, the judge said, I don't think this was ever HUD's intention. And,
No.
but if you read the letter of the law, it tells us that house has to be sold and the loan paid back, or you got to write a check and pay that loan off. And he found in
Right.
favor of the mortgage company. I don't even think the mortgage company, was happy with it, because they don't like to see somebody get pushed out of the house. But
No, especially a spouse, right? I mean,
yeah, so it was that ruling and some others where FHA changed their guidelines and instituted the non-borrowing spouse status in 2014 as a response to it, because I think they were right. There was never this intention that somebody would be bounced out of a house or forced to sell a house. And I think that's where the reputation came in, where the bank's taking my
oh
house.
yeah, that makes sense. That
Bank
makes
wasn't
sense.
taking your house. The bank was doing exactly what they were supposed to do. But there was just
Yeah.
never a provision to protect your ownership interest as a non-borrowing spouse until 20.
Now, you and I have known each other for several years. Every time we get together, I think we could talk for 4 hours and probably enjoy every minute of it and never once think, gee, what time it is. But the time is almost up already today on the podcast. And what I want to make sure doesn't happen is that tonight you're driving home and you think to yourself, man, I wish I would have said this on the podcast, or I wish I would have left the listeners with this or said that. Is there anything that you would like to share? I mean, I would say that most of my listeners probably listen to learn a little bit about estate planning and elder law. I cannot imagine that they are well versed in reverse mortgages. I imagine that as any other general consumer, they're probably confused. So is there anything that you want to make sure that you get out today before we end the podcast?
So I would like people to think about one thing.
Okay.
The internet is a great place to get information, to formulate questions. It should not be the place you go to make decisions. And I think there's a lot of information out there on the internet about reverse mortgages that is not correct. So use it to ask good questions. Don't use it to make a decision.
I love it.
You know,
That's a great comment, man. I think that we could probably pull that clip and use it for estate planning and elder law and financial planning and reverse mortgages. And right. I mean, I can't tell you how many people come in and they did their research and they're not going to be convinced otherwise. And yeah, that's awesome. Very good. Very good. So let me also make sure we do this. Give a little plug for your book. And if I was looking to get the book or to get in touch with you to learn more about reverse mortgages, how would I go about doing that?
sure. So you can go to, I have a website for the book. It's kineticwealthbook.com. kineticwealthbook.com. If you go out there, all my contact information's on the landing page. You can order the book from there. You can even download a free chapter and decide whether you want to buy the book or not. So it's a great place to get in contact with me. I can also be reached. My email address is pretty easy. It's kpitts@kpittsmortgage.com. So that's
Awesome.
kpitts@kpittsmortgage.com. I'm always open to answer questions for anybody about reverse mortgages, and I love giving away copies of the book. So reach out
That's
to me.
awesome.
Reach out to me. We'll have a conversation, and I'll get a copy of the book in your hands.
That's awesome. And as I mentioned earlier, Ken is with Advisors Mortgage Services. So please take a look at the company as well as the book Kinetic Wealth. And I want to thank my listeners. Your loyalty has been humbling, and I'm honored. And I just can't thank you enough for tuning in every week when the new podcasts come out and the radio show. So I greatly appreciate it. I can't thank you enough. So please check out Ken Pitts with Advisors Mortgage Services, as well as his book, Kinetic Wealth. Reverse mortgages can be a great tool for you and your family. So please learn more about it and reach out to Ken if you need any more information. I would like to thank the listeners for coming and attending the Red Wagon Estate Planning and Elder Law Show. I'm Jeff Belomo, and until next time, we'll see you real soon.